Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 19th of March. All right, now I'm not real big into giving myself a pat on the back, but trying to lead you guys around the market is one thing, but sort of giving you like 30 years of experience is another, right? So this was what we're looking at yesterday on the FX Market Insight was looking at that short-term reaction from the Fed's comments, right? Now, they hadn't changed or reiterated anything that they've been saying for weeks and weeks and months, but they did sort of come out and really say, we're not doing raising interest rates for like a couple of years. Like, get that into your head, right? So we see that immediate weakness across the board on the currencies, okay? And it makes sense, right? But, dollar weakness, they're not raising rates. It's like, as I was saying yesterday, it's like a rate cut. So you see that immediate knee-jerk reaction on the value of the currency. And we saw all these currencies spike higher, some more than others. Now, the main fact at the moment is, and we've been talking about this for some time, the main directional force in the market isn't like, well, the macros are starting to come into it and isn't geopolitics. It's these treasury yields, and they are exploding, right? So when we know the yields are going up, it makes the US dollar more attractive. So regardless of what the Fed says, you might get an immediate sort of short-term blip down. But these treasury yields are going up, makes the dollar, this is a long-term structure. So when you come back and look at it doesn't mean that the US dollar is going to rally through the roof. The Fed has come out yesterday trying to explain what they're doing with the yields. They're just sort of saying, we're not raising rates. We don't want everyone rushing too far into the bonds, but that's what's happening anyway. So we're now back to the situation. So the dollar isn't just going to scream through the roof. It was slowly rallying before. They're just trying to manage this rally in the treasury yields, and it doesn't seem to be working too much. So you see that like Euro was a good example, right? And actually, this is quite interesting because I could see a real speculative. When I talk about speculative, it's like a bit more higher risk. You see this multi-top levels here, and even coming back to the low. Like, this is exactly on the level, right? So this is a massive, massive pivot point. There would definitely be stops above 120 the figure, big structured macro positions, but they haven't come into play. So the situation was, we had a situation here where the currency spiked higher on the short-term impact of what the Fed was saying. Long-term treasury yields are going up. So the dollar should just go back to where it was. Okay. At that time, when it's up around this pivot line, it was sort of stalling there. And this is primarily because you can see that there was so much, there's big targets up here, the stops, right? There was so much built into it, so much pressure that the market didn't want to take it on. They didn't want to get short of that level. That's why it sort of hung around. Now you come back into the North American session. We see the treasury yields rally and the US dollar starts to rally again. So this whole Fed meeting, which was a bit of a storm in a teacup, to me was just a massive clean out of short-term positions. Okay. And it made very good sense to be long dollars. So this whole structure starts again. We've got levels here to potentially be getting into these pairs. And if anything, it's a good flush out of short positions on Euro, Sterling, Aussie, Kiwi, right? And of some long positions here in the dollar. So with that, we should get a fresh drive. But what it's going to come back down to once again is also watching the macroeconomic data, keeping a close eye on what's coming out. And we're at the end of the week, so there's not a hell of a lot to look at. If anything, the market loves at the moment, including me, loves weak European/German data. That gives us clear direction on the euro. So hopefully that comes into play. Otherwise, we're now at the end of the week. We're now looking towards next week. Check out the move, the reaction here on equity markets following that recent or yesterday's move on the US Treasuries, right? Yields go up. If these things go up, equities go down, right? So, and the dollar goes up, these pairs go down, this is up. So the majors here, the pricing has just been reset. You can see how like everything's sort of up at this point. The markets are completely diffused. Everyone's sort of scratching their head going, oh, wow, what was all that noise about? Well, it was just the Fed coming out, managing the the markets as best they could. And we're now back to exactly where we were prior to the Fed almost. Okay. So there's now we're looking for these trends and direction to reassert themselves, and we can start to connect with what's going on. I mean, the big one, right, was dollar CAD, massive. The markets, this has been in a really good downtrend. I mean, if you didn't see this yesterday in the North American session, look where oil is, right? It's dropped $5 or $6. This is the main catalyst for dollar CAD. Market short, we get strong dollar, we get oil falling. That dollar CAD trade, I mean, if you're in that North American session and you were at the computers and you didn't see that, okay, focus on where the activity is. That was brewing for some time, and all you really needed was not even the treasuries to move. Oil dropping from say $65 back to here, okay, that's going to send dollar CAD higher. And even if you miss the first level of entry, you get an entry above that resistance line, and Bob's your uncle, Fanny's your aunt, right? I mean, you got to really focus on where the easy trades are. Like you look at euro and a lot of other currency pairs at the moment, they didn't have the clear structure the dollar CAD did, because they've all sort of jacked up through levels. You know, we're looking at pivot points. They're coming back to where they are. Most of these pairs were a bit of a mess, except for dollar CAD. Now, what I'm saying is at the end of the week, we're going to be redrawing all the trend lines to the new highs and lows. We've got some fresh dollar strength in the market with this recent move in the US Treasuries. So let's switch on and see where they go from here. If those Treasuries keep going up, the Fed is going to have to do something, because that's going to start messing with other components of the economy, like housing and other things. And the equity markets are going to come under huge pressure. I'm telling you, when the NASDAQ is down 3%, that has another 3% tomorrow, another 3%. It'd be panic in the market, and we should see some good blood on the streets. And for traders like us, that's perfect. Where there's blood, there's cash. All right, and that's what you got to be thinking. All right, guys, that's it from me. It was interesting to see that we're not losing our minds, and that the long-term direction is coming from exactly where we thought it would be, and that's what we can work with going forward. All right, so make sure you reanalyze your charts. This is the dollar index as it stands right now. You got some clear levels to focus on as we go to the end of the week. All right, guys, have a good one. Cheerio.